Welcome, everybody, to Tokens of Wisdom. I am your host, Dave Rothschild, partner at Cole Freeman and Mallon, a San Francisco-based law firm. And today in the Tokens of Wisdom studio, I have my friend Joe Brennan, a director at Houlihan Capital, which is a valuation and financial advisory firm. Joe, welcome.
Absolutely. Yeah, thanks, Dave. Thanks for having me. Good to be here.
It's a pleasure to have you here. Do you want to start off by giving us just a quick intro of yourself and of Houlihan?
Yeah, absolutely. So Joe Brennan, as you alluded to, director here at Houlihan Capital. I've been here for about a little over 3 years now. I've worked in public accounting. Started out my career in public accounting. In the financial services sector, and made my way into ESOP valuations, and then kind of fell down the crypto rabbit hole, and have been working in the crypto valuation, portfolio valuation space since coming over to Houlihan Capital. So we are a valuation and investment banking firm. We provide both sides of the house. There, I sit on the valuation side, right? We do a lot of different types of valuation work, gift and estate, portfolio valuation, financial reporting, you name it. Really everything but hard assets, I guess, in real estate. On the investment banking side, they do M&A advisory, capital advisory, growth services, and they help kind of lower to middle market companies.
Awesome. Thank you for that. I guess what my audience is probably most interested in is funds and fund valuations. And so I'm wondering, what do valuation services entail for a fund or for a fund manager?
Yeah, it's a good question. I think really for if you're a fund manager and you own or invest in more complicated instruments or securities, we're here to help basically. We offer kind of our services for any type of more complicated instrument. If they are in investments in portfolio companies, right? We work for PE funds, venture capital funds, early stage startup investments. We work with debt funds as well, private credit funds, and so we do continuation fund vehicles. So any kind of valuation needs. Again, I think I mentioned, maybe I didn't, but we do a lot of transaction opinions as well, and so that kind of service is provided. But if you own a portfolio of investments that are more complicated in nature, or just aren't out there publicly, the valuations aren't out there publicly, we can come in and help on an ongoing kind of recurring basis.
Yeah, that makes sense. And I think certainly transaction related stuff makes perfect sense. It's clear to me how that would come up. But if I'm a fund
hmm
manager and I'm just starting a fund, would I engage you, on a one-off to value specific assets? Would I engage you before I even set the fund up to help me figure out how I'm going to value assets? Is it some of one and some of the other?
Yeah, it's a good question. I think we definitely see both cases. I think that the forward-looking fund managers would come to us in the initial stages and try to kind of line that up, the valuation provider, as when they'll need it down the road. Definitely don't need it right away, right? I think those initial periods, even in the 6 months, 9 months period of kind of fund formation, that's not necessarily our bread and butter. But we come in and kind of help out with maybe some of the more stale investments, down the road. Uh, we have helped fund managers kind of set up their policies essentially. So hey, we're going to invest in this type of asset class or this type of investment. What do you typically see in a fund valuation policy? So we have done that as well. But I think ultimately, we come in and help the most when funds are looking to kind of mark their books on an ongoing basis for financial reporting purposes that might be a year or two down the road. Things have happened, right? And we can get into kind of the specifics there.
Yeah, that's great. I've had a couple of auditors on this show to kind of describe at a high level how the fund audit process works, both generally and specifically with respect to crypto assets. And obviously, valuations are a big piece of that.
hmm
And both of those auditors told me and told all of us that it makes a huge difference to the complexity and the cost of an audit if you have the right valuation policies, procedures set up from the start, and you've been kind of comporting yourself in a way that makes sense, so that when the auditor comes in, they can pick that up and don't have to. I mean, I'm putting words in their mouth. They don't have to rewrite the whole valuation book. Is that something
Right.
that you see also?
Absolutely. Yeah. I think that setting yourself up for success like that is extremely important. Just even picking the right auditors or service providers, right? Valuation service providers who have experience in that asset class, in that space, is tremendously helpful. You need to know where the ins and outs are of a given asset class, especially in crypto assets, right? It's, a lot of it is brand new. There are some nuances involved there. And so being able to kind of line that up and get everybody on board, I think is really important. where, sometimes, as you alluded to, the costs, right? If an auditor takes on a client and they kind of, they charge fixed costs, right? So if they estimate, X amount of time spent on the back end for a given client who then comes in and doesn't know what to do for the valuation side, or is, extremely disorganized all over the place, is trying to do everything internally, that can add, that those costs can add up dramatically for auditors. And so a lot of times, there is an outside cost to using a third party valuation provider for sure. And we understand that, but we work with our clients too to try to let them know that, hey, while there is a cost up front for us, you're saving, again, the auditors on the back end from the time that they spend, right? They have someone to come to directly, ask the questions, rather than, an internal person at the fund manager who might not, they're trying to run a business, right? So they don't necessarily have the right the amount of time or the bandwidth to focus on these things. And that's where we work collaboratively with our fund manager clients.
Yeah, that's great. I always tell fund managers when they're thinking about engaging a service provider, in my opinion, to the greatest extent possible, the bulk of their time should be on running the strategy and doing what they do best.
Exactly.
And to the extent they can outsource things and bring in experts who can help them handle specific pieces of the back office or the middle office or whatever the case may be, I think it serves them well in the long run.
Absolutely. Yeah. I mean, you're adding the most value to your LPs and everybody involved by really going out and source the deals and doing everything else you can do, marking to market kind of valuations. It's a nuanced space, obviously, and pulling in outside providers is very, very helpful.
Yeah. So you mentioned something about specialization and finding an auditor who kind of knows the asset class, the industry you're operating in. Is the same true? I mean, I assume the same is true for firms like yours. And, to the extent it is there a specific asset class or industry that you think Houlihan is especially strong in?
Yeah.
How do you think about that?
Yeah, absolutely. Again, we service kind of all different types of funds for sure. So I don't want to kind of limit ourselves with potential prospects or clients out there, obviously. But we have a ton of experience in kind of newer areas, I would say. I mean, cannabis is one, right? We started early in that, and crypto is another. And we have a growing. I mean, I would say that arguably we have kind of the leading crypto fund valuation practice out there. We've been growing that since kind of 2018 when we initially started kind of our foray into the space, well before anybody else kind of got in there. And so you definitely want to have folks who have the experience, who have the right amount of knowledge and expertise in these specific areas. It just helps to be on the same page with the clients. I talk to a lot of clients all the time who can just get a sense of folks. Maybe it's auditors, maybe it's other service providers, fund admins, etc. Lawyers who just don't quite get it, I guess, is the kindest way to put it. They don't understand the space. It's apparent, I guess, to them that they aren't necessarily, I guess, quote unquote, crypto native. And having that expertise really helps in that area. But any other areas too, I think, is really important. I mean, again, we do a lot of debt work, and so understanding the ins and outs of that private credit market and those different debt markets is important for our growing team and for the clients who come to us to lean on us for that expertise.
That's great. So if I'm a fund manager and I'm setting up, maybe a closed-end digital asset focused fund, I'm looking to invest both in tokens, but also in companies that are either launching tokens or doing other things in the digital asset space. When should I think about bringing on a firm like Houlihan?
Yeah, that's a good question. I think, again, it really depends on kind of how forward-looking you want to be and how you want to. So we have certain clients who are even smaller in nature, and they want to do things by the letter of the law. They really want to go out and put their best foot forward, so that maybe down the road they can raise larger funds from more institutionalized GPs or LPs, essentially, and work within that context or framework. So for me, it's coming in early as possible for those, right? You want to button things up, get it in line. Also, we have clients who come in at the last minute who maybe need our services and auditors and come to us and say, look, hey, this client is maybe being a little bit stubborn, or they aren't sure how to go in a certain direction for evaluation. Can you come in and help us? And again, it's going to be a really quick turn. Can you get it to us next week? Things like that, right? It really depends. We probably would advise folks to go the former route, I guess, if you're going to lean on one side there. It doesn't have to be, at the formation of the fund by any means, but as you're assessing your upcoming audit, I would say, in the quarters or months prior to that occurring. Talk to your auditors. Really get on the same page with them. Hey, here are some. Have them kind of push them to look at your portfolio early, because sometimes they're busy. They have a ton of other clients, but get yourself in front of them. Have them look at your portfolio, identify maybe there are some problem children, if you will, that might be a challenge for them to get through. And then ultimately, go and source a third-party valuation specialist. I think having a few of those and talking to them about who are the most experienced in this given asset class or this given instrument, I think really, and lean on your auditors for that process too, right? I mean, we work with all the different types of auditors out there. You name it, which name we've worked with, and so they'll have good recommendations for you. And I think working with them, they'll have experience, right, with the given valuation service provider, and so that would be what I would suggest.
I think that is a super sage and really smart piece of advice. I mean, I think get in front of your auditors, have them take a look at what you're doing, and they can flag for you, hey, this is going to be a huge issue in 6 months when we have to do the audit, or hey, you're doing things, looks like you're doing things right. I don't see a huge issue right now. And then, you got to gauge their reaction and comport yourself accordingly and take action if you need to take action.
Right. It sounds super simple, right? I mean, when you kind of say it out loud, but it's funny how often it doesn't get used or doesn't get done. Ultimately, it's a simple conversation. You kind of start it as early as possible, get the ball rolling, so that you can kind of get the people and service providers in place when they need to be there.
Yeah. So I would assume that most of your fund clients operate somewhat in the more in the closed end space than the open end space, like more thinking like venture capital style funds than hedge funds. I mean, obviously hedge funds are liquid funds that are investing in very liquid assets. They're probably easier to value and less in need of your services, but maybe I'm way off base.
Yeah, no, that's a good point. I would agree with that. Generally speaking, there are some hybrid vehicles out there, and crypto might have caused some of that, right? I think crypto in general has is a quicker kind of time to liquidity, if you will, for a lot of these early investments, if they're making them as kind of safes or token warrants, right? These protocols provide these funds liquidity essentially on a much earlier basis than a private company would, in kind of TradFi, if you will. But that said, generally speaking, I would say that our bread and butter is the VC funds, kind of the PE funds that are operating in private company investments or early stage investments that aren't public, right, in nature. And so that's kind of where we operate the most. But there are some pushes towards, I mean, with these kind of new rules and regulations to include more alt investments and Ks, et cetera, and what have you. I mean, I imagine that there's a push towards more retail and private investments, and so I imagine that those barriers are kind of getting a little bit crushed as we speak, and so there'll be more opportunity, more challenge in the space for kind of evaluations of private investments on a more frequent basis, and so I imagine that'll kind of proliferate in the future.
That makes sense. Do you see regulatory pressure on funds and on fund managers to obtain independent valuations? I mean, I think in the private fund world that I operate in, I don't think it's usually a compliance or regulatory requirement, but it, maybe in examinations and, when thornier valuation questions come up, it's always going to put you on more solid footing to have an independent party in the mix.
Exactly. I would say that there aren't necessarily, I mean, there are a couple instances, right, where it's probably required by law. I mean, ESOPs, for example, some IRS considerations, 401(a)s, some litigation disputes perhaps. But generally speaking, I mean, it is more considered a best practice or highly encouraged. I think that's becoming much more common these days to have a third party valuation specialist to come in. I mean, you distance yourself in a way, right? There are so many overlapping incentives involved in the whole process. And so, doing it the right way is extremely important. God forbid something bad happens down the road, lawsuits, etc. You really just want to shore things up and have an outside specialist kind of come in and view things so that they can truly be independent. That really helps. I mean, that's a lot of the value that we add is to provide the assurance for these our clients, investors, that someone else is coming in, looking at the books, they know what they're doing, they're experienced, they have the wherewithal to come in and assess these things so that the managers themselves aren't just kind of coming up with these valuations on a whim. And so, yes, it's extremely important. I would say again, you want to look great when you're in crypto is a good example too. I mean, it's becoming more institutionalized. The traditional finance world has been, outsourcing valuations for a long, long time. I'd say that it isn't, it's becoming a common practice in crypto funds too. And I think that it'll continue, honestly, as time goes on.
Yeah, and I think it, especially where there are conflict of interest issues, where a
Definitely.
manager's compensation, as it often is, will be tied to these valuations. If you're ever
Exactly.
under a regulatory microscope, and they're asking, well, how did you come up with this valuation? You can
Exactly.
point to a third party and say, look, I did my diligence. I engaged an expert in the field. They helped me figure this out. I think that's going to serve you very well with a regulator looking over your shoulder.
Absolutely. 100%.
So going back to sort of the types of funds you work with, on the crypto side, are there any crypto assets that you just won't touch? Or there's so many esoteric assets out there. Do you work with funds that invest in anything crypto related?
Yeah, generally speaking, we do. I mean, we've seen everything under the sun for sure. There are some different valuation techniques revolving around different, assets for sure. And a lot of the times we operate on the guise of what is reasonable from an audit perspective, right? So I would say we're not going to go out and come up with an intrinsic valuation, for Solana, for example, when it's
Mhm.
trading at a certain price on a given valuation date. I mean, it's kind of akin to trying to come up with a valuation for Apple when you can just look at the price, right? Obviously, so we're not going to do that. But there are some longer tail assets for sure that we've looked at. Some more unique kind of opportunities and engagements that we've seen. A lot of these kind of initial instruments from the early stage startup phase are challenging to kind of review and value, but we've seen all of them: SAFs, safes, token warrants, early stage convertible notes, kind of preferred equity, just the gamut of kind of what kind of instrument you can invest in an early stage startup. And yeah, the token element definitely causes some pause for some folks, but there are and there are certainly some nuanced elements to it. But we have a lot of experience doing that, and kind of valuing things on a fair value for portfolio valuation purpose.
Yeah, that's great. What about NFTs? Would you get involved in NFT valuation, especially something super specific, some piece of art or a
Hmm.
collectible?
Yeah, we definitely have seen some one-off situations over the years, and have looked at some NFTs. I would say that uh, you know, generally speaking, we haven't kind of touched those as much. There was a big push a couple years ago to kind of do that internally. Uh, Turned out that was probably a good idea to avoid, at least at the time. I mean, I know there is a little bit of a resurgence here now, but we people were thinking that all these NFT funds that were going to come into existence and that would be a thing, but it never really materialized that way. Now, some of the kind of there are some services out there that provide a more digitally native kind of way to do that. We didn't take that upon ourselves to kind of build something internally. It just I don't think it was something that we saw as a high target market opportunity for us, though. We haven't ruled it out completely, I would say. It's definitely a market approach, right, in and of itself. I mean, it's not overly complicated. There are some unique scenarios, and you kind of need to have some blockchain engineering ability to build that in house. But I would say it's not our specialty for sure.
Got it. Okay. Very, very cool. What would you say? I guess I didn't quite preview this question for you, so I apologize for that. But
All right.
if you have one, what would a sweet spot client for Houlihan Capital be? I mean, I don't want to pigeonhole you, and I know you can work with all kinds of funds and all kinds of managers, but if you
For
could
sure.
give like a sweet spot client, what would it be?
Yeah, I think our best types of clients are, not, I guess, not overly small, where there is a little bit of flexibility. They understand that this is going to be a cost to their investors, but they're kind of willing to take that on because of maybe A, the size of their fund is a little bit more amenable to that, but also B, they have some ability to kind of tell that to their investors and say, look, this is just the way that business is conducted. It just costs a little bit of money. So I would say the sweet spot probably is our funds who aren't super price conscious. Although again, it's not like we are competitive in our fees, and we have worked with funds, very very small funds up to mega funds, right? So our
Mhm.
client base is all over the place. But I would say probably that is a good starting place. And then again, I think I touched on it. folks who are really interested in finding the truth and understanding that maybe there are some blind spots that they have in terms of kind of marking things to fair value on an ongoing basis. They're very good. Our clients are very good, especially in crypto, but all over the place. They're very good at making the investments and understanding what the thesis is for determining that investment and why they decided to make it. But potentially on an ongoing basis, they might not be as accustomed to getting the information you need, right, to assess changes in fair value, or an investment was made a long time ago and some things have changed, right? The characteristics of the company have changed. Maybe they've since become profitable or have started now earning revenue. There's some different methodologies you can use to employ there. And so, the ability to kind of want to seek out an independent, fair valuation specialist to give them a general sense of their mark, right? I think that is kind of the best type of client who is really excited about finding the most or the highest form of truth, right, in their valuations. And I guess on the opposite side of that, right, it can be difficult to work with folks who have kind of these exact valuations in mind.
Mm-hmm.
But just in general, right, that can be a challenge because, well, we do work collaboratively with our clients to get information, understand that they are the experts. We're receiving the information directly from them. I think that folks who might have more of an exact number in mind can be, just a little bit difficult to work with. I understand that, in any kind of situation that might lend itself to some difficulty. So I would say that would be those two kind of characteristics would be really, really good for us to work with.
That's great. That's a perfect answer. Thank you.
Yeah. Yeah, absolutely.
I guess, and to your point about cost, I mean, to the discussion we were having earlier about the auditors, it's possible that engaging someone like you can reduce fees from another service provider. So maybe in the grand picture,
Exactly.
You might be better off doing it the right way from the start.
Absolutely. Absolutely. It's win-win-win.
How do you charge for your services? Is it flat fee? Is it project based? Is it hourly? Some
Yeah,
combo?
it's typically it depends certainly, but it's typically most often in the per investment basis.
Mm-hmm.
There are some situations where there's a extremely large portfolio and we're doing kind of an unusual valuation perhaps, and maybe we'll charge as a whole. We don't want to be overly punitive in the cases of extremely large portfolios, for example, but that's a different type of style. I think generally most often we charge kind of on an investment or a per kind of engagement basis, and then we kind of work from there.
That's
Really.
helpful.
Yeah.
And I know we've talked a lot about how you dovetail with auditors. Do you work?
hmm
Does your typical work stream dovetail with other fund service providers? Are you dealing with administrators? Are you dealing with the annoying lawyers very often?
Not the annoying lawyers. Don't self-deprecate too much. Yeah, you guys are good people, but ultimately, I would say auditors first and foremost. That they are the ones who are. We have a good group of people who come from audit, right? Myself included, others on my team who understand the questions that need to be asked, and they will be asked. So we kind of we have that good sense of experience there. And then I would say, yeah, for sure the fund admins as well. I mean, those are the ones who are marking the books, and so there is some back and forth there, and to a lesser extent, maybe some lawyers as well, right, on the whole process. And certainly in the transaction world, there's a broader set there. But I'd say for the portfolio evaluation side, auditors first, then admin.
Okay. And if you're sitting in the shoes of a fund manager, what are the top handful of things you'd consider when, thinking about which which valuation which valuation provider to engage?
Yeah, again, I think I touched on it a little bit. I think experience and expertise in the given asset class and industry that you're operating in, I think is just first and foremost necessary. You don't want to have kind of an intro call or kick things off and then be asking kind of simple questions about the space or the industry or the asset. I mean, you won't get the best valuation just in a nutshell right there. I mean, if they don't know what they're doing or they haven't had much experience in there are going to be some nuanced areas of any kind of valuation that you need. And so that's probably first and foremost. I would say, making sure that the valuation service provider has, the bandwidth for sure. I mean, and engaging them kind of ahead of time, I think is important too. You want to give them a little bit of time to prepare. I mean, all providers want to service you, and that's what we're doing business for. But Coming to them kind of last minute that can kind of, again, increase prices potentially if they're going to be needing to do something very quick for you. But also, you might not be able to get the best service provider if you're coming to them last minute. So I would say, seek out the ones who are, experienced in the asset class that you're investing in, and then make sure they have kind of the bandwidth on the back end to actually service you.
Yeah. Choose people who know what they're doing and give them enough time to do it.
Exactly. That's a good summary.
Genius.
Could have said that a lot quicker myself. Well done.
Okay, so I always like to end these conversations to see if you've got any, specific tokens of wisdom for a new fund manager, like either, super smart things you can do on the front end to set you up for success, or things you want to avoid because it's going to lead to, undesirable outcomes if you go down that path. And you
Sure.
can give me both or one or the other, whatever you want.
Yeah, I feel like a little bit beating a dead horse here. I'm going to kind of reiterate a little bit of what I said. I mean, ultimately, you want to give the worst mistake you can make is thinking you can do it in house, and coming up with this kind of complex valuation or some sort of complicated methodology, and not bringing that up to your auditor and giving them enough time to review it, and then you're chasing around trying to figure it out with the auditors. Everybody's pulling their hair out, and it's really frustrating. So I would say, if you're going to go that route, certainly bring it up with them early, and make sure they're on the same page. But either way, bring up the whole valuation side of things very early with the auditor, so that you can go and seek help if you need it. They can require, or they can ask you to go to an outside service provider if you need to. I would say that's probably the biggest mistake that we see, right? We get a lot of those scrambles. I mean, I guess, we don't mind it, certainly we're here to help in some of that overflow capacity, but the headaches can be avoided if you approach that much earlier in the process, right? So, I think as far as I think the other thing you said was the smartest thing to do, right?
Yeah.
Or maybe I'm
Yeah.
okay. Yeah.
It's both. It's two sides of the same coin.
Both. Okay. Yeah. So effectively get it done early, right? I mean, and if you're going to go in-house, make sure you have the bandwidth, and make sure you know what you're doing. And if you don't, be honest about that. I think look yourself in the mirror and reach out to someone who might be able to help.
Yeah. I love this piece of advice. It's not something I would have thought to tell clients, but I'm going to think to tell them now is, go talk to your auditor early before you get into a situation where it's going to be a fire drill. And then, you might have to pay more. You might have limited options for service providers who could do it in the timeline you need.
Exactly.
So, great.
Yep.
Excellent advice.
Absolutely. They always have the last word. Being a former auditor myself, I know that for sure. And so getting them on board, you have to get that thing through audit, and everybody wants to do the right thing. So pulling them in early is always a good idea.
Excellent. Well, Joe, thanks so much for joining us, for sharing your wisdom. It's been a real pleasure having you here.
Absolutely. It's been great talking to you today. Thanks again.
Absolutely.
Take care.
Well, now that all that boring stuff's out of the way, it's time for the part you've all been waiting for. The legal disclaimer. In this show, I describe laws and regulations from a 10,000-foot view. And while this should be obvious to most, I need to say it nonetheless. This show is for informational purposes only, and nothing I say here constitutes legal, investment, or tax advice. If you're thinking about starting a fund or you're curious about your options, this show is a good resource. But if you're going to pull the trigger and launch a fund, please engage an attorney to assist you.